Good morning. Assalamu alaikum. Subh al khair. First of all, thank you, Nabid, for organizing this an amazing gathering. It's a deja vu for me, actually. I came to the region many years ago, just for information, when the region has taken the decision to be at the forefront of high tech and ecosystem. Started with Global Foundries many years ago, 2009. I came here, I partnered with Mubadala, looked at how can we invest in semiconductor in the region, and then we had purchased number of fabs, 9 to be exact, during my previous role. So today I see Saudi is actually looking at building inside rather than outside. So it's an extreme pleasure to have this organized. But today I want to also talk about that. How can a Saudi build a globally relevant high tech and semiconductor? Because those two things go together. And I wrote things down because I think it will be easy for me to have a consistently to share a common vision, but also an investable and executable industrial strategy. Again, the idea today, this ecosystem is not about copying the Silicon Valley, but building irreversible, and I think this word is important, irreversible capability, the kind that anchors growth, resilience, and competitiveness for decades. So with that, I first a little bit share with you, I think nothing can complete if we don't talk about what is the vision. What is the vision that's set by His Royal Highness? So there are 4 pillars of that. The first one is empowering the private sector and attract the investment. I think is the key foundation. Then build specific strategic industrial sectors. Scale the public-private partnership model. And most importantly, drive low-carbon circular industry. The bottom line is that the kingdom's focus is on non-oil industrial sectors and local value chain creation. And this is at the core of Saudi Arabia's transformation and economic transformation journey. I think that we must start with that, and because that's underpin all the development that is happening and how we see ourselves. So just one slide on RAWAS. So what is RAWAS? It's a fancy name, but the ambition of RAWAS is essentially to localize the advanced industry in high-tech sectors, high-tech and energy transition. Set up in 14 months. 4 Saudi conglomerate, they're very well known. Each of them has different family offices, but collectively, them and their portfolio company manages about $140 billion of asset under management. And when I say asset under management, it's not private equity. They are operating them, they're investing them, they're creating them, they're adding value to the economy. So I think when we studied RAWAS, we looked at 4 things. What are the macro trends that is impacting both globally and locally? So what are the macro trends? The macro trend is very simple. Today there is a talk of energy transition, but it's mostly energy transformation. Then we talk about electrification, we talk about digitization. So these are the macro trend that is going on. Then obviously AI is, we talked about a lot of AI is underpinning everywhere, and the resource that is required to power that AI. So that is the scarcity. Then on top of that, you have the geopolitical scenario of tariffs, and then everyone is requiring a decentralized supply chain. And there is a demand of global south. We have 4+ billion people that is going to step into the middle class or upper middle class that would demand a lot of product and services that may be materially different how we design them. So those are the macro trends. Then we have Vision 2030, which we just talked about, and there is a regional global alignment. There are Vision 2030. In China, there is a Belt and Road Initiative. In US, okay, in the past they have a CHIP Act, and of course the underlying theme is reshoring some of the industrial sector there. So every industry have that. So we look at how first, as a Saudi soldier, I call myself that, to drive the Vision 2030, how those aligns with the other priorities. And what is the value proposition of the kingdom? Cost advantage, I no need to say, kingdom has the lowest cost of computing in the world. That will drive AI. Someone talked about water, but kingdom also luckily generate the largest desalinated water in the world, and now more and more with renewable energy. We're very honored to have a person who drove that, but I think Rajit will talk about it on his how he have changed the transformation of the kingdom. The favorable trade agreement, we are pretty, the people who are coming, there are a lot of guests, we are friend with everyone. Saudi is friend with everybody. So there is no restriction unless artificially put together. And obviously we have a prioritized high-tech sector. So these are the third lens. The last line is about partnership. The kingdom, the way we want to do is not from ground up, but bolt in, which is partnering with leading companies in the advanced manufacturing, who has established market access and supply chain, and they have ambition to internationally operate their businesses. Lenovo is sitting here as an example, but these are the kind of four things that we see that underpin what we try to do. So with those macro fundamental, with the four Saudi conglomerate who has been known to execute with a combined experience more than 100 years, we want to capitalize the experience of development, financial, the operating, and the public-private partnership track records to advance the ambition of Saudi in the high-tech sector. So that's what Rawaz is. Now, view that I'll share is all mine, so that, just for disclaimer, this is from my experience of working in the high-tech sector over many years, working in the kingdom. I have the opportunity to work with many leading companies, leading individuals who are sitting here. So I will go through some of my thoughts about how I see the supply chain, and especially what sequences that we may focus on in the kingdom to make it more irreversible is the most important. So first, let me set the expectation. I'm not here to give a semiconductor talk. You know all those things with your experiences. I would not repeat the things that you know. But what I would like to say is that, of course, semiconductor matter deeply. They are enabler, but they are not the end goal. I think it's very important to understand. The real economic engines are the AI infrastructure, electronic system, and the industrial demand. And in a capital intensive industry, sequencing matters. How we sequence all this development is more important for capital productivity than anything else. So the question is, in what order that we should do it in Saudi? So that's what I'm going to focus on. We all know the macro numbers. The semiconductor market is about 700 to 800 billion, heading towards $1 trillion. But most importantly, these chips enable $4 to $5 trillion of electronics and system every year. That's huge. And also there is a shift on those chips. The demand in the past was done by consumer electronics. Today is driven by AI data center, energy systems, EV and industrial systems, and of course, more and more the defense. And the lesson from very successful ecosystem build-up, I've seen it, I personally live in those countries, in Taiwan, Korea, and Japan, is quite clear. Chips follow system. It's very important. System do not follow chips. So I think many countries focus on building chips, fab, and all those things, but they end up with capex that did stranded capex. So that's my first message. So why? Why are we even thinking about doing this in Saudi? I think And I strongly believe it's a country that is uniquely positioned to play the game and to play the game very intelligently. First, there is a lot of demand at scale. We talked about low cost of computing for AI, lots of energy and power. As you know, the kingdom is deploying more than 20 gigawatt of renewable energy per year. Ambition for EVs, industrial platforms, and more importantly, the defense has to be self-sufficient. Second, there is well-known patient capital that follows the direction in a very long-term horizon. And the third, there is a clear industrial mandate. We have Vision 2030, we have the vehicle of Alat and Human, those were specifically created to drive the ambition of the kingdom. So you have the demand, you have the patient capital, and you have a specific industrial strategy. So what I always say that Saudi doesn't have to replicate the Silicon Valley. It needs to industrialize where it already leads. So I think this is the second cornerstone of my direction we're heading. Now, first, I would like to start with the AI data center. Is the anchor. AI data center is never and not a software business. They are hardware intensive infrastructures. Very important to understand the distinction. And what they do, they pull advanced chips and memory, advanced packaging, massive power electronics, cooling systems, interconnections, and system integration. Now, strategically, AI data centers do one critical thing, and specifically for Saudi, they anchor the huge domestic demand that the ambition is put. So it's very important that they create a guaranteed long-term pool for electronics and semiconductor inside the kingdom. And you will hear some example today how it's working. It's so important that we do things in parallel, and it takes the next step, the electronics. So Saudi Arabia should build electronics and high-tech manufacturing in parallel with semiconductor. I think not in sequentially, and I'll go through that. When I talk about those, we talk about server manufacturing, power system, industrial displays, avionics, different electronics. And these are not optional. They create volumes, they accelerate learning, and they reduce the risk, the ecosystem risks. So the demand, this is how it becomes real, not theoretical that you can leverage upon. So I made those slides last night with the help of AI, so not very interesting looking. But what is important here is that there is a technical overlap. I always talked about it. I remember the way China has moved into semiconductor, not by semiconductor. They have mastered first the flat panels. They have mastered not PV and the photovoltaic. Gave them the scale. They learned all these tools that is used, and those tools now going back, and those technology, those ecosystem that is built up with experiences are doing the same thing in semiconductor. So you can't. So my message is very good. Electronics manufacturing, semiconductor manufacturing, they have the same backbone. I put some lists, but clean room, lithography, deposition tool, benches, wood benches, metrology. They're all at this national scales. All those experience matters. And when I looked at countries who have done those, the incremental capex that you do, it reduces by 20 to 30% each time. It's proven, and I can share with you data where it's come from. So it's the countries who go just focusing on one sector versus those electronics and other, as I mentioned, their incremental capex, the next investment, are down by 30%. These are billions of dollars of impact. So I need to talk about that. I think me and Navid talked about it. Advanced packaging. So now I want to pause. This is quite actually misunderstood. Packaging today is as strategic as fabrication. The AI acceleration, chiplets, bandwidth memory, and power modules, you can't scale without the advanced packaging. It's super important. And I think this Saudi, it's an excellent entry point. It's a lower capex, but advanced logic. It's exportable. The talent are scalable. And it's geopolitically super resilient. It doesn't depend on who is allocating your GPUs. So you build up talents. So if you're on a fast sovereign win in semiconductor, it's packaging it is. And it's super important to understand that. I am a pure believer of power and analog semiconductor. These are the two things that are the industrial backbone. Without that, industry cannot operate. AI data center, EVs, power grid, desalination, they don't do without power electronics. It's just the fundamental of everything. And this is what I think Saudi has a natural alignment. It's a mature node. I mean, you can do it at 65 node or above. It's a $1 billion scale, not multi-billion dollar, not 20. It has a sustainable margin. It's not going up and down like semiconductor cycle, and it doesn't go into beauty context. And it has a direct domestic demand. We purchase millions and millions of dollars of equivalent, if not billions, in all our product that is used here. So I call it industrial sovereignty with returns. So this is this is something to think about. Now, the design, I think nobody knows better than here, Navid. It is, I call, the intelligent layer. So what is design? So it's critical, but I think a lot of countries, they frame it quite incorrectly. I think we should not start with fabless, speculative startups that we see everywhere in Silicon Valley popping up left, right, and front, chasing the consumer-driven chips every day. But I think we can focus on the system-driven design. What I mean by that, it's power management, ICs, data center controllers, display drivers, industrial and automotive microcontrollers, and the secure silicon. And it's quite simple, actually. You design in Saudi, you fabricate offshore, you package locally, and then you integrate into the Saudi build system. And this is how actually Europe and Japan, they have started. So this is the model that I see it. You don't have to put in fabrication first, means we can do the intelligent part first. Application vertical, very important. So once we have all this platform, then the application can scale up quite naturally. We can target medical technology, smart devices, industrial IoT, selective mobile and devices, secure devices. Lenovo is going to talk about it, I'm sure. But the strategy of Lenovo and others, these are not separate strategy, they are integrated. What we are saying is we're building one electronics, the demand and semiconductor platform, and we want to monetize it across multiple platforms. So the idea of the system is that you build one and you monetize multiple times, and that's the key message here. So we should not be doing, I always say, we always say what do we do? I mean, you've heard Steve Jobs, you have to say no many times to many things. So what is that? So I think it's important that what we don't want to do, it's my viewpoint. We are not starting with, the extreme ultraviolet, lithography tools, or dependent on that 3 nanometer logic because everybody's chasing the beauty contest. And we're not pursuing the mega projects. We're not pursuing $20 billion bet with uncertain spillovers. I think a large fab without the system is a symbolism, I always say that, not a sovereignty. So discipline here is the strength, not a limitation. And as Rawas, as industrial player, it's so important for us. I want to put something in a concrete context as well. So how do we sequence the investment? So I said, okay, the phase one will focus on first demand on system, if I were an investor, and then looking at the globally. The AI data center infrastructure, electronics, manufacturing, OSAT, and displays. The phase two will focus on capability building with that, which is power semiconductor and design controller. And phase three, I'll focus on scale and IP, because we get the volume, we get the capability. Now let's build the knowledge, know-how. Let's be. So that's how I capital-intensive ecosystem and build without betting on the country's balance sheet. And that's what we don't want to do. The reason I say is crawl, walk, and run. But it's essentially saying reduce the risk to scale your ambition. So now, let's look at, I want to put all together, and if I do a business case, if somebody gave me a blank check, so how do you, Imtiaz, how are you going to invest it for Saudi? What does it mean for Saudi? So let's look at the globally. How does globally look like? I want to close the loop. So if you look at today, a global semiconductor market, $1 trillion, which is enabling $4 to $5 trillion of system. Then you have the data center hardware, which is about $250 to $350 billion, growing at 15%. Power semiconductor, I talked a lot, which is a market of 80 to 100 billion. Then MedTech, smart devices, industrial electronics, 600 billion. Just 1%, imagine, if you just take a 1% on the layer, it's material for Saudi. Just 1%. So, numbers are okay, but I think I just put together a business case. I said, okay, let's look at, I talked about all the sequencing. So I said, okay, let's look at $3 to $5 billion, have disciplined capital. How can I build an integrated platform generating a sustainable revenue? So I said, okay, if I have $3 to $5 billion, I put money, it will be a demand anchor, infrastructure, server display, advanced packaging, power analog, and design center IP. These are the money I'll put, $3 to $5 billion, and look at what it can do in 6 to 8 years. A sustainable revenue of $7 to $12 billion, driven by electronic system and other. Based on what I just say is in the market, I get a EBITDA of 28%, equity IRR, which is industrial investment plus, core plus, what do you call it, and a payback of 6 to 8 years. And that is going to add, I also looked at what does it mean for GDP. It's a GDP multiplier. So 8 to 15 billion, you can do $6 to $10 billion of export, 10 to 20,000 direct jobs, 3,000, 30,000 job, 30,000 of indirect job. And I think a double-digit return, more than 10 billion annual GDP, and the tens of thousands of high skill sets with a 3 to 5 billion. These are not moonshot, right? These are doable with existing technology, but with clear sequencing policy, demand-driven, system integrated, technology-backed. So I call this an industrial sovereignty with return. So let me close this. I know I took too much of your time. Saudi Arabia, in my mind, they don't need to chase the headlines like many people. What we need in an irreversible capability with capital discipline. AI anchors the demand, electronics create the volume, semiconductor lock in the sovereignty. So this is how a winning nations like Saudi can build high-tech ecosystem. Thank you very much.